Welcome back to Fast. We are looking at Caesars up 7% on earnings. Contessa Brewer's got all the details. Contessa.
Thank you for taking my question.
Okay, let me get rid of the call as I'm listening to this right now here, Melissa. Here's the deal. Caesars joins its competitors in this blowout demand in March, way above expectations. 13 properties in March set all-time records for profit margins. March EBITDA alone, almost half the first quarter number. EBITDA. CEO Tom Reeg says on the call, this doesn't tell the whole story. He's talking about April numbers now, preliminary, and that all-important profitability metric. EBITDA, for those who don't know, is like earnings before interest and taxes and all the rest. Last month, it came in more than $300 million in consolidated earnings. Okay, that's more than 25% higher than 2019 numbers, something he's highlighting on the call. And these margins, over 37% consolidated margin, 1,000 basis point improvement over 2019. If you adjust for hold, that is luck, it's almost 47% margins. And by the way, April's traditionally not particularly a strong month. Vegas was only 84% occupied, and Tom Reeg says that will go higher in May and June. He doesn't give guidance normally, but he says he's looking at a run rate here for this year of $4 billion consolidated. And if you think about what the analyst expectation is for this year, $2.4 billion. They've got $100 million of free cash flow right now. They're going to pay down debt. And there's lots of questions by analysts and investors about whether the broad reopening would lure some of these gaming customers away from the casinos. Reeg says, look, these forward bookings are extremely strong. And the group and convention bookings, there's a vast amount of business that is new to Caesars, some 80% of the bookings, brand new to Caesars. So looking really good for them for 2021, Melissa.
All right, Contessa, thank you. Contessa Brewer, and Caesars is now up almost 9% on the back of those very, very optimistic forecasts. Steve Grasso, I guess everybody got, they got out and they hit the casinos. I mean, you lock people up for a year and this is what happens, right?
They want to do something. They want to have experiences. It's worth noting that the pandemic low in Caesars was $6. This stock is trading above $100 right now. It tests the 50-day habitually, as I like to say, for this whole year or back to November. Let's even go back to November. Tested its 50-day 13 times. It was below the 50-day today. It popped dramatically. I would look for it to break above 104, Melissa. That's resistance in the stock. Near-term high was 106. I would just let this one breathe just a bit. This is something where we look at the reopening, but this is less bad, so not terrible. Let it breathe a little bit before you dive into it above 100.
Guy, what do you think?
Steve's right in terms of his levels. I mean, but I'll say this, now William Hill, NFL's on board. I mean, everything is absolutely lining up for Caesars. And oh, by the way, they're making investments in Atlantic City, which is just mind-boggling if you think about it. But they obviously are onto something. 106 was a recent all-time high. This quarter probably leads us to take it out. Maybe you get a blow-off top and an opportunity to buy it back in the low 90s. But I don't think it's going to be quick if it happens. I would rather stay with this name right here.
This stock is up 40% this year so far. At some point, Tim, you look at these reopening plays and you think, how much of the reopening have they already priced in, and how much when are we going to start looking forward to next year when they face difficult comps?
Well, that's a view I have, I guess, for the broader market. I think when you look at disposable income right now, especially as it's channeled into online sports betting, when you look at the new markets that have opened up, whether it's Michigan, New Jersey, the addressable market growth, it's extraordinary. And I think, overshoot is the name of the game. At some point, and again, Steve did do a great job of the levels. I mean, who needs to invest in Dogecoin when you've got real companies that have moved even more than Dogecoin? $670 up to $100. It's insane. So your question is a fair one. I think the exposure here to some of the online betting casinos is something that I think they're going to have very strong numbers for the next 6 to 9 months. We have so much demand, but more importantly, disposable income that I think we've just started to spend. And I think these numbers are going to stay strong.
Shepard Smith here. Thanks for watching CNBC on YouTube.